quarterly results for the last few days. Today morning is slightly different. Even the rest of the Asian pack is shut, save for Nikkei, because of what's happened due to the coronavirus scare. Now, that impact is now being felt across markets. If you look at the Dow futures, the US markets did what they did on Friday, which is fine, and they fell in unison. But that notwithstanding, the Dow futures right now are already looking at a 1% downtick as we speak. And frankly, for the markets which are open as well, it does seem that the coronavirus issue is looking to become a problem. Look at this. This is the China volatility chart, which shows how the markets are starting to come off as the volatility, which are the two charts at the bottom of the screen, the 30-day and the 90-day volatility, are actually starting to move up, and that might be an issue for world markets at large. Today, the Asian market, which is open, which is the Nikkei, is down about 1.77%, down about 421 points, and the SGX Nifty is looking like a start, which is about 100 points lower, so we might have an issue at hand. From an Indian markets perspective, the one thing that could help the Indian markets is crude. So the impact that the coronavirus scare is having on crude is the other part, because crude futures have tumbled off as well. This is a chart which shows, I showed you the Dow futures, this is the S&P 500 futures and how they have come off, along with crude prices coming off as well. So airline stocks, crude, and notable other factors which are all linked to the coronavirus scare are getting impacted. Seth Freeman, Senior Managing Director at Glassratner Advisory and Capital, joins us on the phone. Seth, always appreciate you taking the time out. How large and real could this be for equity markets, the coronavirus scare?
Well, there's a lot of talk looking at the SARS virus, as SARS as an analog for this current epidemic. And, it's going to have an impact on global growth for sure. And, some writers are saying it's going to be 40 billion, around the same impact of SARS. But I would say the situation's quite different in the sense that back then, SARS was going on for some time before the Chinese government really let the world know about it. And it seems like there's a lot more transparency, and the Chinese government is far more aggressive in dealing with it.
So would you believe that, like central governments or central banks in the past few years have dealt in unison with any issue that arises and therefore contain it, this could, as things stand, this could well have the same effect, that yes, it is a scare, but everybody working in tandem and unison could limit the damage that it can cause?
Well, certainly it seems when it comes to some of these health issues, there's just a lot faster information being shared. But still, it's extremely scary and disruptive. We're just getting reports of the first cases in the United States, including one in Orange County, California, which is where Disneyland is. A Chinese passenger arrived from Wuhan, infected. And so this is still kind of early, and it just depends how fast it grows and if hysteria develops.
Yeah, so simple. My final question on this: do you reckon that in the near term the equity markets could continue to get impacted, or is it difficult to predict that right now? The Dow futures, as we speak, are already staring down about 1%.
Yeah, well, this is definitely something the markets don't like. We don't know the full depth of it in China and the level of infection and so forth. And so I do think this is we're going to see volatility as a result.
Oh, yes, indeed. Volatility has shown a sign of a pickup as well, as the charts indicated. Seth Freeman, thanks so much for taking the time out and speaking to us here at BloombergQuint.